I think one of the biggest misconceptions in this space is that for you to have a good sales process and effectively close clients predictably, you need to be a good closer. And the truth is that there are multiple variables that you need to account for when selling something. Obviously, the offer and the power of having something that people desire and want, your ability to deliver, so how well you fulfill your services, but then obviously the predictability of your sales process. It doesn't necessarily revolve around the fact that you need to be a good closer or not. Obviously, if you have good sales tactics and whatnot, you'll be able to convert with a bit more ease. But at the end of the day, the majority of the objections are handled before the call even takes place. You can only become a good closer or have a predictable sales process if you have something that's worth selling and if you're good at fulfilling that. That's the main thing that you should focus on. So if you're starting your business and if you're looking at this video for inspiration on how to close clients because you think that something is wrong, most of the times those problems will come from your offer and not understanding how to deliver results predictably for your clients. So focus on that first and then come back and watch this video when you feel like the problem mainly hinges on sales. In today's video, we'll give you an uncut and unedited access to our sales process. So getting into the process, our sales cycle is mainly composed of 3 different stages. The first of which is what we call the discovery call. So in a typical discovery, what we'll do is we'll get to understand the pain points that the client is going through. We want to be able to assess if this client is a fit for the service that we're providing, because we need to understand for certainty that we can deliver the results that we're setting out to deliver, and we want to be able to clearly outline the next steps.
Quick agenda for today. I'll give a bit more of a context and background as to what we do. Would then love to jump into your stories a bit more and understand kind of the track record, how long you've been in this space for as well, as we dive into the fund and see where we can help with as well. Just to give you a bit more context, so as Dale said, I run this business called Avalanche Capital. So our focus is on helping businesses, mostly venture capital funds, with fundraising and expediting their fundraising process. This business was born a couple of years ago after a short stint working at Vanguard, the asset management firm, where I built a wealth of relationships, had a complete career 180, and went on to start a marketing agency. So something completely different to what we do today, but in which we took a lot of learnings that parlayed into Avalanche Capital. So we understood that fundraising is not only about connecting, person A that's looking to deploy capital with person B looking to raise capital. It's about creating that narrative around the fund, especially for those earlier stage funds, and really ensuring that people understand why this vision is to be trusted and why the managing partner is effectively able to deploy the capital and drive superior returns. So that's mostly what we've been doing for the last couple of years. 90% of our clients will be in the early to mid-market space. So sweet spot is anywhere between $50 to $250 million. And we work a lot on the institutional side, right? So even though we have good relationships with angels and high net worth individuals, the majority of the work is done together with institutional sources of capital, those being pension funds, endowment funds, private equity houses, and so on and so forth. We have a good footprint when it comes to the investments that we've raised and the investors we've got it from, spreading between the MENA, where I'm usually based, between there and Portugal, but also in the US and in Europe. So hope that gives you a bit more context. I'm more than happy to dive into case studies and success stories, but I think that should give you a bit of a flavor of what we do.
That makes sense. The thing is, maybe if we can just jump into answering your questions, and then as we have more questions, I'm sure you'll be able to answer them too.
Absolutely. I'd be super keen just to have a quick elevator pitch, which you're more than used to at this stage, of the fund. So to understand a bit more what you invest into, the companies that you're looking for, typical positions you take on the companies. And then the second part of that conversation, I would want to dive deeper into the fundraising. So understanding what that process has been like, who you've been speaking to, and so on and so forth.
Happy to jump into the quick pitch. You saw the materials.
I did, yeah.
The Arcus fund is centered around fairly unique.
Just one last question before perhaps I go into a process overview and just give you a bit more flavor of what we do, is on the social proof and the track record. So how much of that can we leverage? Because as you understand, Marie, it's a big part of the process, being able to create that narrative and showcase that, albeit this is your first fund, technically it's not, and there's already proof in the pudding. So just looking to understand what kind of information we can leverage there, because I was looking through the deck and obviously it's a bit light when it comes to the track record. What kind of information can we leverage when doing our outreach?
We could do a couple of things. We could list our collective exits, as individuals. Scott McLean and I were both at, the same institution, deploying out of the $100 million corporate fund.
Perfect. So our process is quite simple, and it's been the process that we've used for everyone that we've worked with. I guess that the most important thing to mention is that whenever we decide to work with someone, we work with them until the fundraising goal has been met. So we're not going to be the typical placement agency that's going to come in and say, look, I'm going to charge you a retainer for 3 months and we'll just figure it out at the end of those 3 months if it makes sense. We are committed to your long-term success, and we see this as building a partnership to then work on subsequent funds. That being said, the process typically hinges on 3 different steps. The first of which takes anywhere between 10 to 14 days, in which we look at all of the materials that you have collated, and we make sure that's congruent to previous funds that we have raised for in the same space. So we look at your data rooms, financial projections, models, pitch decks, IMs, and anything that you're putting forward to the investors for them to see, and we ensure that we can create a narrative around it. On top of this, what we'll also do, and I'm sure you've seen the video that I sent over, we'll create a video presentation. So the same way that we introduce ourselves to any partner that we work with, it's something that we like to do for our clients as well, and that we've seen a lot of success with. Once again, this is just taking from that experience of running a marketing agency before. Towards the end of those 2 weeks, we'll start talking more about strategy. So in terms of who we want to target, if there's any people that we should blacklist that you're already in contact with, how we should kind of focus in terms of exposure, that being both demographically but geographically, in terms of the people that we want to go for. Then we start facilitating the introductions at the end of those 14 days. Those happen one of 2 ways. First of which being warm introductions, as simple as it gets, leveraging my network, Dale's, and the remainder of the team. But secondly, using cold outreach. And the reason we do this is because we understand that any network has its own limitations, and there's a universe of people that we should get in touch with that we just don't have access to because we don't know everyone in the world. So what we do there is we use enterprise databases to get access to anyone that has a deal history of investing in the space and that has an active mandate and is looking to deploy capital. And then based on that information that we put together, we start conducting email outreach. We start facilitating those introductions. And as a final step, we'll assist with deal closure, meaning that we'll provide you with due diligence reports, meaning that you're going to be meeting with this person, this is how much dry powder they have, this is how relevant they are, and so on and so forth. We will then come to some of the meetings, especially if they're warm introductions or larger tickets, and we'll support with any need, or in this case, for any information that is needed to progress with the conversation. So if they require additional documentation and you guys want us to do it, we'll get that done because we have the resources internally and we can do it as quickly as possible. We want to focus on fundraising, you focus on allocating the capital and obviously meeting up with these people. So we want to take as much of that burden as possible.
Makes sense as next steps. Let's reconvene on the kind of the fee structure. Obviously, there's things to talk through. We have to discuss, we definitely have to have a conversation on the carry. What I would be open to considering is we obviously have a pretty sizable portfolio where at least half a dozen of our portfolio companies are currently fundraising. Mm-hmm. And so if there is a broader partnership here, because I agree that we need to think about broader than the raise of this one fund right now. If you guys are also helping with portfolio companies, I know Bernardo mentioned that you're focused on funds raising capital, but we probably have a good chunk of across our portfolio company, about $30 million that are being currently raised, that you could help with, that could absolutely follow the fee structure.
Maybe we can chat same time on Friday, if that works, because then you'll have more visibility on what the process looks like, timelines, expectations. And we can just touch base then and go from there. Is that okay?
Yeah, that sounds good.
So the goal of this first call was very simple: to be able to book that client into a second conversation. We're never expecting to sell the service off of the first call, because first we need to be able to understand if we can deliver that service and how we can go about doing so. So as you'll see, the first thing that we did is that we started building rapport, which is a very important step because you need to be able to build authority. So one of the first things that we mentioned when we got into the call is we mentioned our track record. So who we've worked with, how much we've raised, why we're an authority in the space, but more importantly, why we're capable of solving the pain point that they have. Which takes us into step 2, which is to understand a bit more about their business, in this case, which is how much are they raising, what are they deploying capital into, understand a bit more of the bottlenecks and the pitfalls that they've gone through to raise or to effectively carry out the service that they're trying to carry out, and to understand what it would look like if they were not to engage with a service provider like ourselves. So just build that scarcity mindset and understand what the outcome would look like if they were not to partner up with anyone. So what we want to create here is a sense of urgency for them to understand that they won't be able to get to the place they want to get to if they don't engage with someone like us. Once we've been able to understand where their business is at, we'll have a clearer picture of how to deliver results. And that's when we start introducing ourselves and what we do and how we would take them from the position they're in to the position that they desire to be in. And that's where we went over the 3 steps of the service that we provide, but how we would very clearly take them from a moment that they're at now, which is they need to raise capital, to the position that they will be in a couple of months' time once they've raised all of that capital. And we've made it extremely clear as to how we'll get there. The last thing, and this is also to segue into the next call, is to talk about pricing. The reason we talk about pricing in the first call, but we don't make a push to close the client, is because we want them to have an expectation of how much they would pay, but we don't need them to make a decision yet. And why don't we need them to make a decision yet? Because they don't have enough information. And decisions are made based on information. So what we do after this is that we set out the next steps of this conversation. So typically what we do here, and as you've seen on the call, is we'll take all of this information away and we'll start crafting different documentation. As part of the first step, what we would want to do if we assess that this is a fit and we would want to put forward a proposal is to build out a scope of work. So the scope of work will highlight exactly how we plan to deliver results with the expectations both on our side but also on the client side, and then lastly depicting what that would look from a commercial standpoint. So as we dive into it, and the thing I want you to take into consideration is that this follows a very similar structure to the sales call. As you see in the first few slides, what we're doing is we're building as much authority as possible. So we're talking about the background of the company. We're also talking about our track record, some of the clients we have worked with, some of the publications we've been featured on. Obviously, then we give them a bit more of an overview. And before we even get into the process and pricing and everything, we start discussing the reason why we're interested in taking this on and why we would be a fit for the client. So also to qualify ourselves to work with a client. Then we would explain what makes us different, because you need to be understandable of the competition that you have and the advantages that you have as well, and how to position yourself on a winning offer. Then we dive into the campaign phases and deliverables. So the first thing that we would do here is that we would highlight what the overall process would look like from a holistic standpoint. So without diving into much detail, and just for them to have a bird's eye view of what this process would look like. We then go in and we start diving into all of the different steps of the process. And the reason we do this with such a meticulous approach is because we want to be able to handle most of the objections with the documentation that is sent. So that when they come onto the second call is mainly just handling either pricing objections or any queries they may have about the structure and process. So as you'll see, is extremely detailed as to the way we explain things. I won't bore you with all of these details because it's not relevant. We then give them a process and timeline. Not only do you want to show what you're delivering, but you also want to be able to show the timelines you're delivering it in and how you're doing so. And so this is extremely important to set up expectations, in this case the right expectations, and to also hold your team accountable. On the other hand, what we'll do is we'll also hold the client accountable, because at the end of the day, this is a partnership, and both parties need to work together to ensure that we can achieve the results that we effectively set out to achieve. And then lastly, what you'll find here is a cost breakdown. So the cost breakdown will just explain every different phase of the engagement, what that typically looks like, and then at the end, it will just have the price stated here. So what we would do typically with this is we would take the scope of work and we would compile it under an email with more additional information that we would send to the client ahead of the call. What that other information may include is case studies, so just showing how this process has worked for other people, which is extremely important because people will be looking for references and other successful stories. We then want to be able to show any sort of PR that we have out there, and that once again may add that other level of credibility. And lastly, we'll showcase testimonials and more video presentations, just breaking down the process. And now as we get into this second call, I want you to understand and keep in mind that there's 2 things that you should focus on. And that will typically be the overarching theme of the conversation. The first of which is to handle any objections. You want to mitigate and minimize the number of objections that you'll have with your sales process, which we've spoken about the importance of, but obviously there will still be considerations that will come up. These could be pricing objections, so people asking for flexibility on pricing. These could also be objections around the process and just having more specific questions around what you do and how that could be of value, and understanding if there's any overlap to what the client has done already. And then secondly, and more importantly, just clearly outlining what the next steps look like. Because what you want to be able to create is a seamless process in which the client understands that from the moment that the contract gets signed and the invoice gets paid, that they will be seamlessly onboarded and that you'll stay equally motivated to help them succeed with their goals. So now let's look at how we set up those expectations and how we manage those heading into our final call.
Today, obviously I sent across a lot of information for you to unpack.
Yep.
So I assume you'll have a lot of questions and a lot of points you'll want to jump into. So I guess we can just open the floor for questions and go from there.
Yep. I mean, I usually start with the end in mind, but let's just So I think what would be great is for us to arrive at some understanding of your thought process of the quote unquote work it's going to take to be successful and raise the 65, the timing, and preliminary thoughts around segmentation and things like this. So that would be kind of where, and that would arrive to me, would give me some more clarity around the proposed fee structure. Because I think today, a good outcome for today would be figure out, I think there's a mutual understanding and appreciation that we would probably want to work together. Let's figure out how it makes sense for all of us and how this is a first step towards a bigger partnership.
Correct.
So that's where I would probably want to land at the end. And an input for that for me would be just give us a little bit of kind of your thought process after having seen the material, heard from both of us. Where do you see the biggest kind of risks or work? Where's the area that we need to nail down so this could be a successful raise, if you will?
Okay, so strategy and timelines, the two main things that we want to cover, correct?
Sure, yeah.
I think on the basis of where we're at, and given that we work with a lot of early to mid-market funds, there's a few things that play to our favor. And that's what I highlighted on why we're interested in taking something like this on. I guess first of which, the ideal round size, which is going to follow into the strategy, but is a size that's good enough for us to put this forward to endowment funds, pension funds, and people that can come in and put $5, $10+ million checks. At the same time, while allowing us to go after smaller investors, angels, high net worth individuals, and so on. It's an industry where we have experience working in as well. Healthcare, we have a smaller health tech fund that we're working with. That's a $25 million target. But still, it's something that we understand quite clearly and have seen a lot of demand in the market with. In terms of timelines, what we typically say from a standing start, anywhere between 6 to 9 months. Obviously, the fact that you already have 35% of the capital committed may make that a bit faster, but we need to take into consideration where we're at in the process. So month of December, realistically, not much gets done. We'll just prepare it from a structural standpoint, meaning looking at all of the materials, getting those video presentations out, working on the strategy, because January is usually the best month for fundraising in the year, especially taking into account kind of the state of the economy following the elections. So it's definitely something we want to capitalize on. So in terms of timelines internally, to take the next 2 to 4 weeks until the end of the year, to really build everything out, build that foundation, and then hit the road on January 1st and crack on from there. It's a bit of a kind of an overview because there's a lot of points to touch, but happy to dive deeper into any of them.
Think about the work that needs to get done. I think maybe there's some packaging around the messaging. Maybe our pitch deck doesn't fit into the formulated or structure that you guys want to put together. And then we definitely want to talk about the video. But at least from my perspective, I think crafting the thesis, crafting the messaging, and having enough data to support a track record, a lot of that heavy lifting has been done. On that front, we need your packaging to put it in the format that you find most impactful. In terms of the due diligence, let's say we have those first meetings, welcome you guys to be part of the first meetings, especially on some of those super warm introductions and relationships that you already have. The part we need to talk about currently, the way our fund is structured, it's easier for us to get LPs from the US and Europe. We need to add additional disclaimers to our private placement if this is actually going to be expanded internationally. To answer your question, we do have a lot of pull with the strategics on our side. That said, investable capital is always welcome. So if we are able to fill the fund internationally, then depending, I guess the question is on your side, do you think that your network, funds of funds and endowments, pension funds is US or versus internationally more overweight? And the last thing I want to make sure, and it goes without saying, is that once we get into the nitty-gritty of this, I want to make sure that this brain trust between you, Dale, and Bernardo, and the two of us stays the same. These touch points are happening rather than being a lot of the busy work maybe needs to be delegated out. Bernardo, I'm sure you're a master at delegation and getting things done. But how are you envisioning the four of us staying connected and you being involved over the next 6 to 12 months?
It's a very hands-on process, and especially in the beginning, because if you look at the time that we have allocated as a project, the majority of the time initially will be spent refining that story, creating that narrative, that video presentation, doing the strategy, talking to different sets of people, and understanding where the resonance is within the market. And so even for us to get the highest ROI possible out of this engagement, we need to make sure that you're talking to the people that you should be talking to. And so that means that the first conversations you're having, we're jumping on those calls with you, we're listening in, we're understanding which pieces of the process we need to iterate on, and how we can create as much of a value proposition that aligns with these investors as much as possible. Obviously, as time goes on, and as we align all of this, the majority of your time will be spent taking meetings with investors. And so the majority of our time will be then helping you prepare for those, and once again, helping double down on the number of people that we bring in. So that's kind of how it works as a process in the beginning. And all of our clients we speak to on a weekly basis, sometimes more than once, really just to make sure we align everything, because that foundational bit and that preparational part is obviously the most important to ensure that we set up the right foundations for this partnership.
Great. I ticked off a lot of the questions on my side. I think what is important for us is to have a trusted partner. This is not the first fund we're raising. We want to grow, and we want to grow the notion of care convergence beyond the US and internationally. And so to us, so that's number one, right? We want to do this right. We want to be known as the care convergence team that builds and scales and exits companies in that space. And number two, we want to do that relatively quickly. To your point, let's take advantage of the post-election cycle dynamics and see where it goes. I also want to make sure that we are, you're providing feedback. We're open to feedback. We have what I would say strong points of view that are loosely held. So when you bring us data and feedback, we are pretty open-minded to figure out, hey, how are we going to get this done? And if it turns out that we need to open to LPs outside of Europe, let's do that fairly quickly rather than go down the path of like banging our head against the wall for 8 to 12 months and then be like, oh, wouldn't it be great if we open up the pipeline? I know that you're on top of it, but I'm just opening the door for that. Let's talk a little bit about the funding, not the funding, the kind of the terms, and then we could talk a little bit about if you guys have interest. There's a bunch of companies on our portfolio that are currently also raising. So that could be an additional opportunity for you to, if you want to take on individual companies to help raise. To me, that's less of a priority, but I want to throw opportunities your way so we could be helpful too. And then when you grow the pie, then there's enough to figure out how you share on the bringing new revenue contracts, funding the company's growth through contracts rather than equity. Selling equity is always a preferred place for us too. So I'll park that as an option to continue to talk and explore. But in terms of the fees, I thank you, Bernardo, for sending the scope of work. Obviously, we talked a little bit about the 5% of kind of a fee on capital raised. I think that's fine. It's a larger amount. It's at 65. We've seen some proposals come at 3.5 because of the larger size. But I am comfortable with you guys coming in at 5, given all the experience and our preference to work with people we like to. The carry is, and you probably read it on my face last time, it was a little bit of a surprising thing for us. And I'm happy to talk a little bit about how we are structured internally, so that to take you through a little bit of what the carry maps out to us. We should probably consider that we have signed an NDA. I don't know if we did sign an NDA, but obviously everything we talk about is
we go Yep.
That's right, under the friend DA, if you will, which is much more stringent. But our current carry pool, and I could maybe, Scott, if you want to get into it, we could talk through it a little bit. I think what's interesting is, even if you take a step back, like you're going with the carry because it incentivizes and aligns us for the longer term. I would consider it if it was somebody else asking, given that we are already in a somewhat of a depressed carry situation, and we'll tell you why. What I might consider doing, which could be interesting, and you tell me how you feel about that, is putting some sort of a carry on raised capital.
Oh, yeah, of course.
For the first 6 months, and that gives us extra stimulus to get this done quickly, and we could see what that looks like.
Trying to build the underlying value into our business outside of the fees is those kind of longer term positions and partnerships. But again, we are trying to be respectful of the fact that you've done a lot of the hard yards, quite frankly, because getting the anchor in is a big part of that hard work. So yeah, I mean, look, if you've got some ideas in terms of how you'd want to do that to make it accountable and a bit of a stimulus, but I'll just kind of, and I'm sure Bernardo will reiterate this, again, as long as the other parts are there, then that part, we're happy to kind of be flexible.
Of course.
Or again, on the notion that you've done the hard yards, if you will. Look, again, this is like I say, I'm looking at this as not the last piece of stuff that we can potentially do together. There's more funds to come, and obviously those will be kind of more coming from a standing start, and we can look at a bigger partnership. So it's not going to be a deal breaker in any way from our side, I think, is the point I'm trying to make.
I think that's not a deal breaker. I think we should think through it, figure out how we want to put the numbers together. Yeah, and then we'll think through that and come back to you guys, because I do want to have a quick decision on that front and then move forward.
Like I said, just flexible. Yeah, to make it flexible, make it accountable, some form of stimulus for early delivery or something like that.
Do you want us to put those something together and get back to you? Let us do that. Let's maybe put some of these numbers, knowing where you're, or Bernardo, whatever you guys feel comfortable.
I can give you the example that I've just given you, so at least you've got something to visualize. Working from that and put something together.
Perfect.
Probably the easiest. Look, yeah, I get the point that, I mean, ultimately that's your guys' incentive. It's, we never ask for a huge chunk, just enough that it brings us some underlying value, if you will. So again, happy to look at what you're comfortable with.
Is this on the higher end of the people that you work with that need more work versus less work? Because I was surprised that this was a little bit on the higher side, but are you thinking that this is going to require more work in terms of the video and materials?
No, this is actually taking into account what's already been done. So typically this fee is, for a raise of this size, is anywhere between 100 and 150, but it's obviously a bit lower taking into account the carry component and the commission, but it's typically around this number, yeah, if not a bit higher. Then I can speak for Adele. We don't want this to be the deal breaker, and in any way, shape, or form, also because the commission and the carries would keep us incentivized. This is obviously to cover any hard costs that we have during the period of the engagement, but the alignment here is to do this as quickly as possible. So we can look at options, for example, breaking down into 3 consecutive payments, for example, or splitting the first payment now and the second payment in 90 days. There's different ways you can think about it. Whatever works for you, I'm sure it could also work for us. So we're happy to just see something that gets closer to what you have in mind. And then we can just go back and forth via email and get that done quite quickly.
So after this second call, what the client will now do is review the service agreement and progress with the invoice. Once that's taken care of, we move into a different stage, which is the onboarding stage. And although that's not necessarily part of your sales cycle or what you would consider your sales process, it is still part of a good sales process, because you need to ensure that the client is well taken care of after that call takes place, and your team effectively remains aligned going into the service delivery and fulfillment. So there needs to be kind of this open line of communication between the person that takes the call, which in this case was myself, and then with the team that will pick the client, or with the team that will then take the client on and start delivering results, because there's a lot of considerations that are brought in by the client that need to be highlighted for your team to be able to deliver good results. And as you've seen here, and the goal of this video today was to showcase that a good sales process doesn't come down to your ability to close. As you saw, I didn't use any sort of sales tactics or anything that you would see out of a movie or anything for that matter. Is more about building a good educational process, and that will nurture the lead across all of the different stages. So even from the moment that they book the call, they need to start being educated and seeing success stories, testimonials, your process, so that they effectively come into those conversations already having a good understanding of what you do and how you could potentially be of help. Everything that's taken care after is mostly understanding if there's a fit and if there's an alignment between you as a service provider and your client as someone that needs help, and then effectively showcasing your ability to deliver that in a predictable manner. People will never have problems paying high amounts for the service. They just need to know that they're getting a good deal out of it. So as you can see, we sell something that's extremely high ticket, but because we have a high level of confidence that we can deliver a 100x return on the service that we provide, we can command higher fees. And so you need to be able to showcase that to your clients. They need to be able to understand that you're effectively the partner that can get them to the position they want to be in, which is their dream outcome. And then everything comes down to your service delivery and fulfillment.